Welcome to the Fuller Tracy Money audio commentary. This is Owen Tracy recording. It's 3:24 p.m. and that is Central Time. And today is it's September 25th. When we kick off today, I think the continued strength of the dollar is really quite something that is affecting a lot of different asset classes. It seems to me that no one seems to care about anything other than the interest rate differential right now. So they're not really worried about deficits, and they're not worried about government overreach or the possibility of a government shutdown. The simple fact of the matter is that the dollar's interest rate differential is helping it along quite significantly, and it has clearly broken the downtrend. So then we have the oil price, and oil prices were a bit mixed in here today, up and down, but still holding inside their range. Then we had a little bit of weakness in the gold price, but nothing overly dynamic, still holding around the $1,900 area. But of course, that's in US dollar terms. In any other currency that one chooses to redenominate it into, gold has been performing much more impressively, and that of course is a factor of the continued strength of the US dollar. And silver was also in negative territory today. And then we have the copper price is still easing back, not in a dynamic manner, but just about holding on. And then when we think about stock markets, well, we had a weekday on Friday, not much in the way of follow through on Wall Street today. The Nasdaq was up about 80 and the S&P up around 20. So nothing very dynamic either, but not breaking lower. And then in Bitcoin, we had a decline of about $130. But it was down to 26,000 in the low of the day and closed substantially off that level. So there's a lot of back and forth going on. Meanwhile, China's property sector broke downwards to new reaction lows, and that was one of the causal factors behind more risk off action in early trading. But then we had the good size rebound on the primary CSI 300 on Friday. So no follow through, but not a new low on the wider index. And then the rebound that we had in markets like Australia and New Zealand on Friday did hold. But again, nothing really in the way of upside follow through. So I think we're still in a very difficult environment where rallies aren't really being sustained. But I think there's plenty to look at in the charts. So let's go ahead and continue with that. So